JP Morgan Nasdaq Equity Premium Income ETF, or JEPQ, just announced a 34-cent dividend payable to investors here in February, which is the lowest dividend JEPQ has ever announced since the inception of the fund being created. Not to mention JEPI JEPQ's brother or sister, the JP Morgan Equity Premium Income ETF, just announced a 30-cent dividend, which is one of the smallest dividends we've seen in a while when it comes to JEPI. Now, across all my portfolios combined as of filming, I currently own well over 1,000 shares of JEPI and over 500 shares of JEPQ. And I'm definitely far from happy when it comes to these new announcements and the fact that the dividends for both them seem to just consistently be getting lower and lower. So in this video, we're going to go over what JEPQ and JEPI are, explain why the dividends keep getting lower and lower over time, and what my plans are with these two. If I'm going to buy more, if I'm going to hold on to my shares, or if I'm planning on selling these, and what I'm planning to buy into next. Now, if you hold either JEPI or JEPQ, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So before going into what JEPI and JEPQ really are, just for some full transparency, I currently have almost 1,250 shares of JEPI across all my portfolios, and I've held and owned these JEPI shares for several years now. I haven't been buying that many more JEPI shares over the past year or so, but JEPQ on the other hand, because of JEPQ's holdings and performance over the last year, I have personally loaded up on a lot more JEPQ, and I was planning to do so up until this most recent dividend. But without going into too much detail on what both of these ETFs, JEPI and JEPQ, basically here on the JP Morgan website, they explain that both these ETFs are simple covered call ETFs that invest into a basket of holdings, and then all along while the management uses an option overlay, which for JEPI, for example, implements a written out of the money covered call S&P 500 strategy. And this is what allows JEPI and JEPQ to distribute a lot of income as far as in the form of dividends to investors on a monthly basis. Now, as far as JEPI goes, I haven't added that many more shares to my portfolio for a while now, and that's just because with JEPI's overall holding breakdown, we haven't really seen all that much growth as far as ETF price performance over the last year or so, which again, I understand that these are covered call ETFs, you're not really going to get much performance as far as price return goes altogether, although in the case of JEPQ, we have seen some great performance. The ETF is up 21.21% over the last year, and again, for a covered call ETF, this is absolutely amazing. Now, like I mentioned, I am fond of JEPQ's overall top holdings, things like Microsoft, Apple, Amazon, Alphabet, Nvidia, etc. 50% of the portfolio being technology, which means the portfolio is going to be a little bit higher beta, which is what we've seen over the last year. But the problem with these ETFs, and let's take JEPI for starters as an example, since the ETF's inception, the dividends paid on a monthly basis have been overall pretty nice, pretty big, but as you can see here, there's been times historically where the dividends have been larger, and times where as of recently the dividends are back down to the lowest we've basically seen over the past 4 or so years. Now, one of the main reasons on why JEPQ and JEPI's dividends are smaller or larger over time is because since they're covered call ETFs, the ETFs rely heavily on volatility being in the market. Now, when volatility is spiked up, let's say like it was back in October of 2023, you're going to see option premiums much higher because there's more implied volatility throughout the market and throughout the holdings or the index that JEPI or JEPQ sells covered calls. But during times like we're seeing as of recently, volatility is basically at an all-time low over the last year, which is definitely good in some cases for investors, but in the case for option premiums being nice, high, and juicy, it's definitely not the case. So with that, over time, investors are going to see the dividends paid from JEPI and JEPQ be a lot smaller or larger, once again depending on where volatility is within the context of that time frame. But at this point, as a JEPI investor, for example, it's starting to get almost a little bit ridiculous. The fact that this 30-day SEC yield now, as of right now, is only 7%, and this is for a covered call ETF that's basically traded sideways within multiple time frames, or even down depending on where you bought it. Now, in the case of JEPQ, it is a little bit different of a story. The 30-day SEC yield is still at 9+%, which is not bad at all. And again, like I talked about earlier, JEPQ is basically traded almost straight up over the last year. And because of these performance differences, if you were to compare JEPI to JEPQ over the last year, let's say, JEPQ's returned 36.27%, where JEPI's returned at 9.8%. And whether you own either one of these two ETFs that we're talking about in this video or other covered call ETFs, I totally understand that over time, the dividends that are paid ongoingly are going to be different. And that's sort of just what comes along with these ETFs. Whether you're buying into something like QYLD, JEPI, JEPQ, or even something a little more risky like TSLY, the distributions are going to be much higher than that compared to other stocks or ETFs, generally speaking, across the market. So with that, you're definitely going to expect some volatile distributions. which again, for me personally, I've held on to both these for years now, and I totally get that. But with being a long-term investor as of currently that holds over 30 positions across my entire portfolio, and side note, this is every single position more or less across all my portfolios combined, and you yourself can also grab this dividend tracker. It's the first link down below in my description. But as you see, over time, I built out different positions of different stocks and ETFs, and just the fact that JEPI and JEPQ pay such a sporadic amount as far as dividends on a monthly basis, it's really sort of frustrating. And long term, I would never want to have either one of those be a large portion of my portfolio, just because I like to sort of know and have a sort of gauge on how much dividend income I can be expecting on a monthly or quarterly basis. Like, for example, take my 2,826 shares of ticker symbol Realty Income, for example. Realty Income, for example, has been paying consistent dividends for many, many more years than I've even been investing. And what I personally like about Realty Income and names like this that pay a consistent dividend that slowly goes up over time is that if I buy a share of Realty Income today or a few shares throughout this week, ongoingly on a monthly basis, I can calculate exactly how much dividend income, at least more or less, that Realty Income is going to pay me ongoingly. Now, comparing that to my 1,248 shares of JEPI, for example, my 1,248 shares of JEPI, if JEPI announces a 40-cent dividend on a monthly basis or a 30-cent dividend on a monthly basis, that is going to change my dividend income pretty significantly over time. And even though at this rate, it's only going to change my dividend income currently maybe $100 or so on a monthly basis, keep in mind, not all that long ago, I did have plans on loading up on a ton more shares of JEPQ over this next year, which definitely could have changed the portfolio's dividend income ongoingly pretty significantly. Now, all this not to say that if you are an investor out there that doesn't really rely on dividend income or really care if you get paid, say, $120 one month and maybe $240 next month, and so on and so forth, then maybe JEPI or JEPQ or some of these other more sporadic cover call ETFs might be right for you and for your portfolio. But for me, in the direction that I'm trying to build out my long-term portfolio, I'd much rather have a large portion of the portfolio be sort of set in stone and have more of an idea on what I'm going to get on a monthly basis, especially if that means that the dividends are going to be smaller and smaller over time, like we've generally seen from JEPI and JEPQ. Now, with that, I'm pretty certain that I'm not going to sell off my 1,200 plus shares of JEPI or my 500 plus shares of JEPQ as of this moment. And that's because overall they have performed pretty well in the portfolio, generally speaking, but just because of the variable dividend on a monthly basis, and just because my overall strategy moving forward here, building up my long-term portfolio, that I want to build long-term, I don't think I'm going to buy another single share of JEPI from here, at least unless something else changes. Now, that all to say that if I were to have to grab or have to pick, I suppose, between JEPQ or JEPI as of this moment, even though, like I said, I'm not really interested in grabbing either one of them for my long-term portfolio anymore, I would definitely most likely, without a doubt, grab more shares of JEPQ over JEPI, just because the overall holdings and, of course, the performance of the ETF as of this point. It's been very impressive, not to mention JEPQ has paid significantly more in dividends, at least over multiple timeframes, comparing those to JEPI's dividends. And in the conversation of JEPI versus JEPQ, it feels like I'm not alone. A lot of investors across the dividend community seem to be much more interested in buying into JEPQ than JEPI, at least from what I've seen. Now, with all this being said about JEPI and JEPQ and their most recent dividends announced, I want to hear from you guys down below. Are you currently gathering any more shares of JEPI or JEPQ for your long-term portfolio? And if so, comment down below which ones you're grabbing. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.